Boom. We are alive, ladies and gentlemen. Big drops in the Bitcoin market cap yesterday. Billions of dollars of longs liquidated in minutes. Dropped almost $10,000 in the heat of the moment. It was actually pretty funny. I got home yesterday and the light from my office was red, just like it is right now. I'm like, oh, that's weird. I was like, things do look a little weak. I was like, I wonder if my light is trying to tell me something. And less than 45 minutes later, Bitcoin had dropped dramatically. Now, it's an exciting moment. There's a lot to be learned from this experience, and I'm going to use it as such, as a learning experience. So what we're going to do is start with Bitcoin and kind of lean in and out from there. So here's Bitcoin on the 6 hour. Up here, you could see this long-term trend line. We couldn't close above it, and we fell pretty much almost instantaneously afterwards. Now, this is not necessarily a cause to be concerned, right? So we'll turn the light back to green. But fundamentally, one of the things about distribution that I've been wanting to keep my eyes on is usually a huge amount of supply that comes into the market, kind of right at one of these turns of events. And we'd actually seen that in a few other areas that did get me a little worried yesterday. DOT is a great example. We went over this previously here. This area was looking good. The first few kind of days, like this all looked healthy, all the supply coming in. What bothered me yesterday about some of the supply checks come in was this huge amount of buy volume that came in right before the sell. And I did see this in a few different areas, but let's just kind of go over what that looks like. So for those of you that are new to the channel, we like to study something called the Wyckoff trading ranges. And ultimately, what we do is look for these areas of support and resistance. Now, clearly you can see back here, this is when we were down near 30,000. Here was the trading range we were following. We had our first breakout. We move above the box. We tested the top of this, and now we're in a new trading range. So part of the question is this is always the question, if you are late to the markets, which you might be, the bull market started effectively March 11th, right? So the best time to get in was pretty much March, April, May, June, July, August, September. Those were all still like really early, very low risk entries, essentially. Anything entering today is a risky situation. And I have not been making any entries well, actually, it's not true. I buy Bitcoin every 2 weeks, basically. But I haven't been taking any leveraged entries into Bitcoin, not since back near $30,000. And there's a reason for that, is because it gets more and more volatile. And we've gone over this with other areas of conjecture previously with Glassnode. So here on Glassnode, what we like to do, and I'm going to go over a few things here today, just kind of talk about where I think Bitcoin is going, why, and kind of last night's crash too, because apparently there was a power outage in Xinjiang. She's like, obviously, should touch up on my Mandarin a little bit. But the point of this is, we did see a nice drop of supply on the open market, which is good. So every time you see Bitcoin leaving the exchanges and going into cold wallets, the volatility of the market increases. So I've said this a few times, but now it's kind of blatantly clear that as supply leaves the market, you don't need that much supply to come onto the market to get these big exaggerated moves. So apparently, right? And news is kind of a lagging indicator, but apparently the power went out and this dropped Bitcoin's hashing rate dramatically. Well, first off, this should be a noticeable sign to anyone who's actually interested in the concept of decentralization, of why you need more than just Bitcoin. You can't just have like one. Kind of defeats the purpose of decentralization in its entirety, because you would want many. We would want to distribute all of these ideas into multiple areas of the crypto sector, and I think that was a prime example of why that's the case. Oh no, mining went out, hash rate drops for just a few hours because of one place in China. If anyone doesn't see the weakness in that, I'm sorry, but you've missed out on the key story there. But what it should remind us is that when we see this when we see the increase in volatility, it's not just increase to the volatility of the upside. And that's really, really dramatic case here. Now, the supply that came in is actually fairly similar to our primary shakeout, which is nice. It's usually what you look for is some type of relationship with the primary shakeout. And we had talked about this many times before, even in our primary back here when we were in this trading range around the $30,000. One of the reasons why we had talked about the spring coming in here was the amount of supply that came in. We were right along this trend line of the amount of supply that came in during the primary shakeout, and that's kind of what we look for, is this amount of supply coming onto the market and its price spread effect. And this is what Wyckoff had called the law of effort versus result. And right in here, again, you can see less effort, more result for the downside. But that makes sense because right now we're seeing a large amount of Bitcoin leave the open markets. And even from yesterday till today, we dropped almost 1%. That means that price drop was chewed up by the long-term holders. They very quickly bought more Bitcoin and then moved it off the exchanges into cold storage wallets. And we've gone over some of the stuff in the past, like where was it? The realized cap hodl waves. I think this is a Willy Woo indicator. You can check him out on Twitter. But no, this one was done by Nick Carter. I feel like I'm saying a Backstreet Boys for some reason every time I think about that. So here, the realized hodl cap waves basically kind of show the duration and the length of time Bitcoin's been sitting in the average wallet and the kind of ways we see it affect the price. And generally what they're relaying here is that in these bull markets, we're seeing multiple what they call hodl waves. The amount or the length of time that Bitcoin's had to be in a cold storage wallet, how high the price is before those kind of later stage wallets start to hit the market. And we've kind of hit our first, what they call hodl wave here. And this is important to remember. I think it's why we've seen so much kind of accumulation and distribution in this area specifically, right? First and foremost, if you're a miner, right? If we go back, and we've talked over this a few times as well, but I kind of want to put this whole story together. We've talked about the miner net position change. Now, a few months ago, about a month and a half ago, when we were down near 30,000, and again, not too long after, the F2 pool had been selling Bitcoin. Now, everyone's like, oh my God, the F2 pool is dumping Bitcoin to miners, manipulation. Well, that's important to understand. There's a great lesson that we can learn here. And the lesson is that miners are a business. They mine Bitcoin to then sell it so that they can grow their business. And we've seen a lot of profit taking in this area to maintain probably a 3 to 5 year runway for their business. That's what I do. And I think it's important to recognize that there is a business and there are business-minded people keeping Bitcoin afloat. I think yesterday, if the electricity going out in one province in China and the hash rate dropping so dramatically, I think, again, is a prime indicator that A, it's not as probably as decentralized as people would like to think it is, and B, we have this area of increased volatility based off of reliance on the people who keep the network up, running, and safe. And that's an important thing to keep in mind. And it's a weakness that Bitcoin has not necessarily addressed yet. What if the electricity just goes out for all of China? Well, I don't know what would happen. I'm not smart enough to pontificate on it. But again, the volatility increase here was very noticeable, and we saw it across the board. Now, what's interesting here to me is Ethereum actually looks healthier than Bitcoin. And the argument, again, is that are we witnessing distribution? And that's kind of what we always want to be weary of, right? Is when we see an above the box breakout, we really want to think, oh my God, is this the start of distribution? Like, is the light red? Did I get home and the universe was telling me that the light was supposed to be red? Like, I came home, I came inside, the light was red. I was like, that's weird. Why is the light red? Actually, it's funny. I should have done it. I almost took a photo and posted it and been like, oh, light's red. I would have been, apparently the light was right. The light knew it was coming before I did. My power happened to go out here as well. So when my power goes out, all of my resets, and then this light behind me here goes red. So is it a distribution? Are we actually in a red moment? That's a big part of the question that I think everyone's trying to figure out right now. Ultimately, we don't see the supply characteristics coming in here that would signal to me that we are seeing a red moment. Not in Ethereum, not in Bitcoin, but there are other areas where it did look a little more dangerous. Now, let's go through and let's kind of make a little bit of random conjecture. What the fuck is up with Doge being such a goddamn gangster? Look at this. It's already rebounded 36%. That's faster than Bitcoin. Congratulations to everyone who holds Doge. If you're a part of the private bear family, you'll know I started buying and holding Doge just as a kind of like a measure to the market to say, hey, you know what? I'm not going to pretend that I'm smarter than the universe. I'm going to actually signal to the market that I don't know what's happening. And therefore, I'm going to make sure that I always have Doge in my portfolio because I don't know what the fuck is happening. And I think that's important to recognize that, as much as we like to think ourselves more intelligent than the average bear or monkey, it's difficult to grasp how random the world and universe can be. So in my bid for randomness, I definitely bought some Dogecoin. And the reason why I did that, again, is to signal to myself that there's a massive amount of room for upside in asymmetry, and I'm not going to pretend that I know everything. So I'm going to make these small bets and kind of frequent small bets in these other areas so that I can have some skin in the game when it comes to that I don't know process. Now, I do lean a hell of a lot heavier into the things that I do think I know something about. But again, I think this is important to recognize is that right now we're seeing a lot of interest in Doge. And ultimately, what's brought Bitcoin all of its value is interest in that product. And that's important to remember that really the demand side is what increases the price. It has nothing to do with the underlying fundamental tech. And I think GameStop was a prime example of this. Had nothing to nothing to do with the underlying earnings ratios of a company. It's strictly the illiquidity of a stock and the buying or the demand of that stock and the current supply that was available on the open market. So that's why we've seen such a nice run up in Dogecoin. Happy to be able to enjoy that one too, kind of just right at the right time. Again, for those of you that are in the private family, you'd be listening to me talk about this probably the last 2 months about my vote for my own ignorance and me trying to compensate for my own ignorance and I would like to live happily in a world that is randomly experiencing itself without my understanding. I was rewarded for it. Actually, more significantly than I thought I would be in a very short period of time. Better than everything else I've been doing this last 2 weeks. Now, again, if we go back to Bitcoin and we make our solid thesis, I like Bitcoin. I think it is amazing money, right? I'm not trying to argue that people should own Dogecoin because it's better than Bitcoin. Clearly, it's not what I'm saying. What I need myself to understand, and the reason why I'm repeating these things is because it's actually difficult. For a long time, I thought stocks had something to do with the underlying company and how well their CEO. It doesn't. It's really just a game of speculation. The entire market is a game of speculation. And if you have an illiquid supply and you have a lot of demand coming in, that price, and especially due to the lack of supply in the market, is going to create a lot of volatility, both to the up and or downside. So this is good. This feels good. I like that my vote for randomness paid off because everything else was going in the opposite direction pretty much that week. So that was a really fun kind of personal note for me. I know we get it wrong, right? You don't get it right all of the time, but leaning into what you think is a strength for yourself. And for me, recognizing that I don't know everything and very clearly stating to myself and to the market and now to you that I don't know what's happening is I think a very, very important sentiment because it allows room for the unknown to happen. And I love those things. They pay off extraordinarily well. So Ethereum looks stronger than Bitcoin to some degree here because at least it didn't break back into its box. But again, as long as it doesn't look like distribution, and here our supply characteristics down at the bottom, both in Ethereum and Bitcoin, look generally fine. We're going to want to watch really closely for the next 48 hours because that can change quickly. But ultimately, if it would have had me worried if we had big supply lines like this coming up for this part, this first kind of run up through the price, and we didn't. We actually had fairly average supply characteristics coming in, so I don't feel worried here, but. As we go down the line, SRM, which is a play that I had been leaning heavily into the last month here, had a really, really big, the last two, geez, I think time goes forever. What is this? The crypto world moves so quickly. How long does that? Okay, 9 days. I just called 9 days a month. Crypto, I'm surprised I don't look 60 years old yet. Fell out of this widening megaphone pattern, almost instantaneously hit the bottom of our trading range and bounced back up. Avalanche did the exact same thing, right out of the bottom, boom, bounced to the bottom of the trading range and have started to bounce back up. M-Stable right back to the bottom of its trading range well, but it didn't fall outside. FTT showing a fair bit of strength here. Again, this is a little late in this position. I actually I actually closed out a good chunk of my initial because I made most of my entries here. But I like the FTT token. I'm using it on the exchange, so I'll just keep it staked there. It looks like we're hitting the bottom of the trading range. So across the board here, we are seeing some fairly nice support areas come in. But this is what bothers me. And this is what I'm kind of, let's say, not worried isn't the right word, but this is what is creating a little bit of haze in my understanding right now, is this price spread and this supply check on a few different tokens. This one we're looking at is 1 inch right now. And again, I don't know, but reaccumulation ranges very quickly turn into distribution ranges like that. And then we're in that phase now where it can very quickly go from green to red and change. And ultimately, you know, I think that there's a longer story here. I think that there's two ways to look at your portfolio. Number one, from an asymmetry standpoint, you can be just buying and accumulating only for most of your investing career and do extraordinarily well without ever selling. And that's a crazy thing to think about. I definitely suggest reading the books Dan Dao and 100 Beggars. They're very, very closely aligned with my interest in asymmetry, randomness, and, well, investing, I guess, more specifically. But here, when we're looking for that final moment where we go from what's an accumulation range, you have a distribution of potential top come in. It's the next little bit that makes a big difference. So let's kind of take a step back here and imagine that Bitcoin actually goes into a distributive moment, right? Let's say we're up pretty high. There's not a whole lot of buying power anymore. There's not a whole lot of demand, but there's still a fair amount of supply from everyone coming in. Do we see a kind of a change of character into a larger breakdown here? And there's nothing to say that right now we don't do something like this. And this is where it would get a little worrying, right? We boom, and then you come back all the way down to like 19 grand and then form let's say another year of a accumulation channel between 20 and $30,000. And that's still on the table. So this moment of buying blood in the streets is kind of usually a fear moment like a pandemic, but we can also look for it in the institutional wide sector, right? And the hash rate dropping is kind of like an institutional wide moment of fear. Now, we don't know the long-term effects of that. The supply does not look distributional to me. So ultimately, I don't think it is distributional, but it very quickly could become a distribution. And that's what we want to keep an eye on. And if Bitcoin had the same characteristics as here, 1 inch supply, where you have this massive amount of supply coming into the market, and DOT on this secondary push up here, where you just have this enormous amount, this blue bar, this enormous amount of supply coming up and almost no price spread whatsoever. That would be worrying to me in Bitcoin. I'd be like, oh, damn, son, like, you know, you want to make sure that you're not confusing these two, right? Because very quickly, a horizontal accumulation range like this can turn into a distribution moment. And that's really important to remember. You know, you got to put the art in chart, ladies and gentlemen. Otherwise, you're just a fart. But if you love farts, you should definitely check out Matthew Silver, because that's a good friend of mine. Side point. Okay, just quickly, we'll roll through the rest of them here. We were at ADA. So ADA came dropping back down again here. See this? These supply characteristics, these don't look, they're like a little worrying. If Bitcoin was doing this right now, I'd be more worried. But again, huge amount of supply coming in with very little price spread. And then much bigger price spread to the downside when you see the secondary supply come in for Cardano as well. Synthetics dropped right back to the bottom of his trading range. Again, you know, we could maybe even measure yesterday as a fear moment for the industry. I'll do a little bit more thinking and pontificating about that, but you could rally that this was a fearful moment for most of the market to some degree. So we're going to want to keep a close eye on it for the next 24 hours. Because again, here, Balancer is another great kind of example of what has me worried here, is that this enormous amount of supply coming into the market in the middle of the trading range, which should be effectively our starting of our phase C, D, and E. So this doesn't look good to me. Balancer, that doesn't look healthy to me. I'm not excited about that. And we see that in a few areas too. Kav actually held out pretty nicely right to the bottom of his channel. DOT, yeah, we went over DOT, had that big chunk. Rook still looks actually very, very bullish, nice SOS right down to the backup phase. Band, see, again, here, this is what's kind of crazy, is the volatility that came in and the supply. And this is what I'm a little worried about, is that these are actually, especially for things like band right now and maybe a few other areas, that this might be signaling a kind of weakness in the market. Whereas this is our horizontal trading range. We've got our up thrust, which it turns us into distribution because of this supply characteristic that we see down here. So let's kind of quickly go over this just one more time here. So again, I believe we are approximately halfway through the bull market. I do not believe the bull market is done. There is the downside scenario, let's say, where we potentially drop to like 19 grand and spend a few months in a reaccumulation before going maybe much higher. This could be a pathway to, let's say, $300,000 with a more sustained run to retest an area that low right now. That wouldn't be a bad thing. I'd actually be extraordinarily excited to see that. I think that's the case. I've got to keep a really close eye on how the next 24 hours of this trading range confirms or denies itself. Nice close above 56,000 would be great, but currently we don't have that. We're still stuck in the point of control for Bitcoin. And even if I show, if I go to the Heikin-Ashi candles here, you can see we're pretty much well below that point of control. Yeah, well below the point of control right now. So, not a great sign, but not yet a bad sign. So we're going to want to keep a really close eye on this, because there is a reason to believe that we could have a swing low. Let's see. I'll just kind of draw it in here like a random swing low. Boom, with a reaccumulation channel here, something like this. Not entirely improbable. So I still think we're going higher. And again, there's a few reasons for this. We've gone over the miners net position change. Ultimately, the miners are still holding on. We've seen the exchange balance stacked for Bitcoin. There is Bitcoin only leaving the open markets. It is not coming into the open market right now. So all signals on chain lean towards bullish. The stock to flow ratio as well also has us up near $100,000 for the average kind of price for Bitcoin at this particular moment. So we're just keeping a close eye on everything, because again, based off what Bitcoin did there, it was able to scare the entire market. Everything in that moment dropped. So just as a kind of general consensus, though, too, we have the DeFi perpetuals, which still held up into the top of its phase. Now, again, this is why we got to be a little concerned here, is that we could go, okay, this is phase A, this is phase B, and this is phase C, where we're actually starting to see an up thrust, and we might see distribution come in, and that could be a noticeable drop. Again, I don't see those signals in Ethereum or Bitcoin yet, so I tend not to think that I don't think I see them here yet, but there are definitely indications on a few of these other plays where there's a massive amount of supply coming in phase C here, not where I'd like to see it. So we're going to have to keep a close eye on the markets for the next little while. Other than that, again, guys, a lot of you ask like, oh, when's the best time to get out of the market? If you're asking that, it probably means that you didn't have the best time to get into the market. And I much more suggest that you go back and go back and look at all the videos we've done from, let's say, April, May, June, July, August, because in March I was sitting outside of the cowboy hat on for a little bit of that, so we won't go back to March all the way. But if you go back to May, June, July, August, that was the best time to start layering into pretty much every position, right? So if you just got in within the last month, this is basically a month in any of the sector, 69 days, 70 days since the new year, which I'm assuming is a good majority of people who are listening. The new retail investors, is you're going to want to be focused on your long-term investment strategy instead of just, oh, can I make money today and 6 months from now be like retired? It's just not going to do it. You're going to end up losing money playing games like that. And more importantly, you're going to end up missing the potential for the long term. I'm not a maximalist about Bitcoin in any way. I think that fundamentally speaking, looking at companies like FTX and what these open source decentralized exchanges can do, like Uniswap, there's just an enormous amount of technological innovation going on in the financial sector. You would be so silly to miss that. I think, again, when we take the line of asymmetry, we go and read books like 100 Baggers, you're usually looking at, well, what can I put $10,000 into that will turn into $10 million? And the time frame is usually about 2 to 5 years. If if you get lucky, it happens within 5 years, right? So really try to keep that long-term perspectives on your guiding vision. I think it becomes a lot easier. So yeah, everything, we're just gonna have to wait and see. Was not expecting that, and again, it's kind of put some of the plays I'm really excited about into, let's say, a predicament. Like, you know, for instance, like with Avalanche here, that was a big supply test. We dropped all the way down to $20 on that. That was crazy. We dropped so far. So a little bit concerning to see what that does to the rest of the market. But also, again, I think what it reminds me is that much like 2017, when the top breaks, like everything is going to collapse down, and Bitcoin will go just as far and just as fast. I mean, if you compare both Ethereum and Bitcoin at a percentage drop, they're almost identical. Yeah, 20% for Ethereum and approximately 20% for Bitcoin, 22% for Bitcoin with that wick included in there. So when the market drops the next time, it's going to drop like significantly, like when this is over. And again, I don't think it's over. Even if we go to 20 grand, like it's not over. That's just another potential reaccumulation range. And part of me kind of wants that now. Part of me would be super excited if Bitcoin dropped to 20 grand. Oh my dear God. You'd never see it that low again. You will never see it that low again, right? Here, we could still see it that low again, and it would be nice to. It'd actually be kind of fun to fill that gap. I'd be super excited if Bitcoin all of a sudden dropped to 28 grand for a day or two. Dear God, that would be fantastic. Again, I don't think that's the case. But we're going to want to keep a close eye, just because this can very, very quickly change. We can see a close, and then it could be bringing us down to 20 grand or something like that. So. Anyways, let's take a look at some of your guys' thoughts and questions. What about Safe Moon? Never heard of it. I prefer a Dangerous Moon. The alts don't matter until we know what BTC is doing. I disagree with that. Clearly, Link had a bull market while Bitcoin didn't, so that doesn't matter. So there's the black swan that proves that wrong. Okay, yeah, it's not true that it will drop if Bitcoin drops. Like here, let's take Solana as an example. So Solana is one of the positions we've been building. And although Bitcoin dropped, Solana jumped right back to a new all-time high pretty much. Yeah, look at that. So fuck that. That doesn't make any sense. What you said makes 0 sense. There's evidence right there. Bam. See on the screen, there's evidence that this is not how that game works. You can't just say these blanket statements and hope that that's the truth. Yes, for a lot of positions, you did see a big recoil, but look, even with 1 inch, let's measure the drop here. Yeah, approximately 20%. So Bitcoin and an alternative asset dropped almost identical. Whereas here within Solana dropped the same 20% and then instantly went to a new all-time high. So I don't see how that works. Sorry about that. Anyways, just try to prove ourselves wrong, and if we can do that, well then clearly we should find a new thesis. Can you go over your positions with Avalanche? I'm still holding Avalanche. See guys, you really need to read some books that I tell you to read. Because if I tell you to read a book and then you don't read it, I don't know how many times you're gonna have to repeat the same kind of like value and you not grab it, you know? Like maybe you need to put it a little bit more homework in. I'm invested in this sector for the long term. I don't give a fuck what happens to the price today. It could all drop 50% and I'm gonna go, great, I'm buying more. Fuck. We need to think a little bit more long term here, ladies and gentlemen. My positions are aimed for the next decade. If it drops 30%, I don't give a shit, motherfucker. Anyways, whatever. That's a different story. I know if you're just starting trading and investing and you're like, oh, it's like the end of the world, your account, like, oh my God, my account is down, let's say 20 grand and I was up 25 grand and now I'm only, it's like my world is ending. Like you need to go read more books. You need to sit down. You need to breathe. You need to read more books. You need to go meditate and then breathe and then read more books. You can listen to audiobooks too. I cheat all the time and listen to audiobooks. But when it comes to holding a position, if you bought that position, you should at least be willing to sit into it for 5 or 10 years. So that's my thoughts on my positions for Avalanche. Dead people are the best investors. Yeah, guys, you really do your homework. You'll love everything we've shared so far if you really, if you go out and enjoy it. Like I can't do it for you, sadly, right? Let's see, take a look at a few more of your guys' thoughts. Can you walk us through trading strategy with Avalanche? Austin, you asking again. I'm not always trading back and forth. No, that's a horrible idea. That's a horrible idea. The people who have made the most money, aside from like Jim Simmons, are definitely long-term venture investors. And I don't like, I'm not a big fan of, you take people like Jesse Livermore, right? He's like, I'm trying to get into the markets. He's like, I had $100 million and I lost $100 million. It's like, dude, calm the fuck down. Why'd you go and lose $100 million afterwards? Now you got to try and chase the markets. Like, I like doing good and then relaxing. So I'm not trying to trade all the time. Most of my positions I bought back in March, April, May, June, July, August, September. And I've added a few more now of kind of positions that I hadn't taken before, like FTT, like 1inch, like SNX, like Cardano, that I'm just not going to touch. I'm going to wait to see what happens with the rest of the bull market cycle. If they go lower, I'll buy more. I'm not like trying to jump in and out. Those people usually just lose money. There are people like I can do it. I've made great trades, but I much prefer like sizing up the whole market, making my market entries, and just letting the market do all the hard work for me because it pays way better. Anyways, no Bitcoin predictions here. Although I do believe we're going to around $120,000 to $150,000, probably at the minimum for this bull market. But we might go to 20 grand first. That'd be amazing. I'm going to be hyper amped if we go to $20,000 Bitcoin first. The pandemic is what caused the price to rise. No, so the pandemic didn't cause the price to rise. The pandemic caused what's known as a spring. So a spring is a very unique moment in human consciousness where people get scared shitless about things. I was even scared. Like I was a little scared way back here in August, right back near where this bottom moment is. These are the best times to be getting in here, right? If you go back and you look at the channel, we charted this trading range and this trading range and this trading range and this trading range, right? So that more than like exiting, you should be interested in why the fuck did I miss this part? You should be working as hard as you can to know that in 2 to 3 years from now, this moment is going to happen again. And you want to make sure you're still around because this is where most people are gone zos. And this is where all the fucking fun starts. It's over here in March. So the pandemic didn't cause the price to rise. The pandemic caused the price to fall. And in that moment, all of the supply was transferred from weak hands into strong hands. People that had enough money to make it through the pandemic without giving a fuck what they thought their assets were worth. And generally, if they've been around for 50 years, they know that when people are scared, they are irrational to the downside. Right? So this makes a great point for entry. And because of that, as all the supply is transferred from weak into the strongest of hands, the market goes only up from there. And we've seen that in literally everything, in Ethereum, in Tesla, in every aspect of the market, in every time there has been fear in the markets. If you're worried about when you should be exiting, it means you probably fucked up and you didn't get over in here anywhere between May, April, June, July, August. And that's what you want to be focusing on fixing, because that is where you make the most money, is by making entries here and then sitting and basically doing nothing but checking in the market. Like the reason why I show up every day is because I'm trying to figure out like where I am from where we started. So like, okay, great. We started here. We're about halfway through the bull market. We're about halfway through. I think we're going to like 100 and something. We may even go to a few $100,000 in this nonsense. Bitcoin is wild like that, illiquid supply. So as we get into this minutia, I'm not like trying to like jump out at Bitcoin at 65 grand and jump back in here at 54 grand. No, I'm not doing any of that. I don't do any of that kind of stuff. It's just not smart for me. I like size of the market. I make a bunch of big entries here. I was opening leverage positions for Ethereum. I should have just left open longer, I guess, but that's okay. We're always learning. And this is what I've learned that makes me the most money and causes me the least amount of stress and involves the least amount of fucking effort. And that has been a highlight of my strategy for quite some time. Why is your hair so sexy? Does my hair look ridiculous right now? Yeah, it does. I look like, wait, hold on. What's his name? I don't know. Someone. I look like T.O. Okay, thanks. Awesome, great. I'm glad you enjoyed my answer there, because I was being a little scoffy. I not on purpose towards you, just like in general is how I should talk. What do you think about the Tribe VC plays backed by Andreessen Horowitz? Great. So one of the fun things about asking me what I think about a venture capital play is if you understand, okay, I'm gonna try to explain this easily, because I think maybe what I've done is I think that other people know what I'm talking about, and I've probably made this mistake. And it's because I'm kind of an idiot. I like focus on my little world, and I think other people know all the things like that I've read. Asymmetry is this beautiful moment where I think the book Dan Dowd is a great way of explaining it kind of simply, where it says, heads I win, tails I only lose a little, right? So with this idea, tribe, I don't know what the fuck, you mean Fae? Maybe you're meaning Fae, I think, and tribe put together. From that moment, if you know that it's asymmetric, it means that you put in however much you're willing to lose, and then you walk the fuck away, because you don't have to do anything more. That's literally what the point of venture capital is. That's what I think about it. I love venture capital. It means you can put a small amount of money somewhere, you can wait 5 to 10 years, and it might be worth an order of magnitude fucking higher when you come back, and you didn't have to think that much about it, because all your thought was, do I mind risking this much money, knowing that it's probably gone, but that it could be worth orders of magnitude higher. And that's really my sentiments for all venture capital. All of venture capital, good or bad. That's why I still own Dogecoin, because what the fuck do I know? If you find something interesting and you use asymmetry as a measure for volatility and risk, game on. And even more importantly, if you can wait to do it when people are scared because there's been a pandemic, you'll do even better. Let's see here. Did you buy more today? I actually bought more Bitcoin yesterday. It's kind of just at the wrong point on the fly there. But again, that's not really a thought to my process as much anymore. Although I'm probably going to pick up some stuff. I was going to buy more FTT, but I woke up and I went out for breakfast with a friend instead, because that's what I wanted to do. Glad you're back, Tio. It's good to be here. Play for us. Okay, I'll play some music. Generally, how many people day to day attend the private den meetings? Oh, it is a private Discord group that has around 900, almost 1,000 people in it. So it varies depending on who's chatting and how, we've got the peer review area, a bunch of different places where people collaborate. Yeah, I think more importantly though, it's understanding the time frame. Like a lot of people just don't recognize the depth of time. Like there's a lot of members have been there for 3 years now, and they're the ones who have made the most money off consistently showing up and investing in the private group, because they were able to recognize the 7 plays we had in our private newsletter between 2018 and 2019 all did over fucking 50x. For every $1,000 you put into any number of the plays that we had in our newsletter for 2018, 2019 is worth over $50,000 today. At the low end, motherfuckers. Okay, so, well, what does that do for you today? Well, no, you have to keep showing up. It's not like, oh, I'm going to join the private group today and next month I'm going to be a millionaire. You're fucked up. You didn't listen. You didn't listen to anything I goddamn said. You got to keep showing up for like 3 to 5 years. And that's what the group is really most powerful for. I go in there, I'm like, hey, there's Bear Den Jerry and there's Gandalf, right? There's all my friends that I recognize. Shit, there's box mining is in here too. What? And that's important to me because I keep showing up, and that's what's been the most successful for my investment thesis so far, is keep showing up and keep making investments. Tio, you live in Costa Rica? I do. Great. I love this. Charlie Brown says, I've held for 6 months and it's done nothing. Well, Charlie, he says, well, 5x, but still. Okay. Well, Charlie Brown, what you're disappointed with is actually yourself, because you didn't get here on time. These books you're recommending, do you have a list? Oh, so many of you guys have asked that. I'm going to have to make a book list. But what I can do is I'll make a book list. Yeah, you asked for it. I'll do it. I'll make a book list finally, a bunch of you. Yeah, you guys want to really make sure you're keeping like a 5-year thesis on everything that you do in the investing world. Speculation is one thing, like knowing how to size and time the market. Oh God, it makes such a huge fucking difference. Like this year, I did so much better because I was 100% confident that we've been in a bull market since March, and that was like, woo-wee, that rewarded me highly. Whereas in 2017, I was a little slow to the gun. Bitcoin was like $700, $800 by the time I was like just throwing capital in it, but it still did great there too. You look like Ian Tracy. Don't even know what that is. I'm still happy Bitcoin's over 20 grand. Yeah, I hope it goes back to 20 grand. That'd be amazing too, right? But yeah, you want to, more than like finding an exit and being worried about price, for those of you that are new, you need to figure out why you missed this area, and you need to start working on your life to adjust it so that you are here with the Arcane Bear family in October, November. So if you do join the private group because you are adventurous and like to try new things, just don't ever leave and you'll be successful. Most people fuck up because they leave. That's like, all you did wrong was not keep showing up, guys. Like, because you weren't here at these key moments in time, and instead you bought Bitcoin at 50 grand. Don't do that. Show up on time, and then you won't be worried about today. And I won't have to ask silly questions, because then you'll be reading all the time. Anyways, I had a lot of fun with you guys today. Thanks for letting me shit talk. It's always good. I swear like a madman today. Yeah, give us a thumbs up if you like this content. You know, all the fun, good things in life. Keeping a close eye on the markets, guys. Again, I would like to see a nice close above the point of control here. That would be fantastic, Captain. A nice close above 57, 58 would be great, but we're going to have to wait and see. In other terms, stay happy, stay healthy, and tell your family you love them. We'll see you guys on the other side. It's Tea with the Arcane Bear. Oh yeah, and remember to go to all the channels down here below. Follow us on Twitter, LinkedIn, Instagram, all that silly social stuff, and we will see you guys again on the other side. I hope you enjoyed that little bit of a roller coaster drop last night. Fun. Did you feel your stomach in your throat? Did you taste your lunch? If you did, it might mean you're new to the Bitcoin and crypto sector. If you didn't, it might mean you've been here for a while. And if you didn't, or if you did, we hope you enjoyed the ride. We'll see you guys again on the next one.